Good evening, everyone, and welcome to Session Recap. Today is the first it's the first webinar in 2017, and I hope that this year will also bring us a lot of pips as the previous year, and I really hope that we will see a lot of good setups. Today I prepare for you 5 different setups: Euro dollar, Pound dollar, Australian dollar, Australian dollar, New Zealand dollar, and dollar CAD. And our Friday dollar yen setup that was published on Forex Street, that was also published on other markets. It originally, guys, went into profit. I tweeted about it, and it really went into profit. I said clearly that it will be bullish on after NFP report, but actually NFP report was not good, but wages and unemployment were excellent, and because of that dollar yen went up. I mean, that was really no surprise that it went up. Now we see some correction, and because of the correction I won't be giving you any new dollar yen setup, but dollar yen from Friday was excellent. So I wish you again a great 2017. Now holidays, guys, are behind us. We are ready to trade. We are ready to exploit new setups, and I hope that we will be seeing a lot of good setups for this week and further. And as I said, starting from mid-February, we will actually have a live trading on Wednesdays. So each Wednesday will be live trading, okay? So with that, I wish you welcome. And first we go with risk disclaimer, and then we will proceed to setups. Online education materials are available by Admiral Markets Estonia for a global audience. Have in mind that this information is for informational and educational purposes only, okay? And with having said that, if you're ready to proceed, you accept all the risks associated to trading. Risk disclosure statement stating all possible risks. If you want, you can pause the screen and watch it again. And if you're ready to proceed with me, you're accepting the whole risk disclaimer. Okay? So my name is Nenad, and these are rules and setups. Okay, these are rules and setups that we use for our session recap. First, we need to give price a breathing room, and usually we enter within 15 pips of the predicted level if it's in agreement with your system. Okay, those zones that I post are so-called buffer zones. Okay, so if you see that the price is 0, let's say that the price is, for example, I will clear this out for new traders. If the price, let's say, is 0.500, you can enter also around 0.485. That is those 15 pips of buffer zone. We need to use buffer zone because we trade the zone. We don't trade anything but the price with our analysis, with these setups. So because we are price action traders, we trade the price, and we are only interested in price action setups. Okay, we are not using any indicators to pinpoint where we should trade. We only use price action, and with that said, we trade in the zone, guys. Okay, we trade in the zone. That is very, very, very important for you to understand. So trading in the zone, okay, that is one of our main principles when trading, and usually our setups are very, very accurate. You can read on Admiral Markets website each day, okay, and of course on Forex Street. So use scaling in if you wish. Okay, guys, scaling in is a great technique that I also explained in our webinars. For example, if this is the level the zone that I provide you with. Okay, you can enter here at 0.485. You can add at 0.500. You can add at 0.490. Okay, but the main thing, you don't move your stop loss. So if you want to trade with 0.3 lots, you can divide your trades, entering 0.10 each time the price retraces within the zone. Okay, and the thing is, you always need to keep your risk constant. I don't recommend, guys, more than 1% of risk per trade. Okay, that is how I do. That is what ultimately will bring you a positive account, because whenever you risk more than 5 pips, you are in danger zone. And you know how hard it is to actually make up for a big drawdown. You know how it's hard to make up for some 40-50% of drawdown. So whenever you see that your trading is going bad, think twice and think of me, think what I've been saying to you, that it's probably because of your bad risk management and money management. Usually the biggest culprit of bad trading is bad money management. So when we talk about Holy Grail, I'm sure that Holy Grail is money management, nothing else. Okay, of course you need to understand the price, you need to have good entries, but even then, guys, you're able to make money if your money management is good. Well, it's up to you. Some people like to risk, some people prefer to have 1-2 trades per month, make 20, 30, 50%, and then they just step away. Some people want to trade with risk every single day, so it depends of your trading style. But if you want to be and trade like professionals do, that you will really keep low risk, sometimes even, guys, below 1%. Okay, so we take one position, guys, per listed pair. Okay, it's either positional trade or alternative trade. Positional trades are always in the trend direction. Alternative trades are counter trend direction. Sometimes we might see scalp setup, sometimes we might see breakout setup. So those are 4 main ways how I trade. Firstly, I'm a trend trader and I prefer to have a trend-based setup. Secondly, if I miss trend-based setup, then I wait for counter trend setup. But in between, if I see that some important levels are being taken out, then I can trade breakouts. Also, guys, don't forget that you can always zoom in to lower time frames to try for a scalp trade. But mainly we are focusing not on 10 pips. So at least, guys, what we want to have here is 20 pips, not less. I mean, this is the rule, guys. The only thing where you can really think, where you can think about taking less than 20 pips on these setups is when really, I mean, let's say that you were in profit, like 30, 40 pips, and then suddenly price drops and, well, you can take 10 pips, right? But really, you need to try to profit stop your trade. So let's say that our entry is here, the price is going down, we just move our, this is stop loss, we just move our stop loss here. As the price progresses, we move our stop loss. I usually use pivot points, Camarilla. Okay, I also go with ATR, and also, guys, the least number of pips you want to secure is 20 pips. Okay, so this is what you should aim for. As I say, sometimes you can take less, but it's only in some circumstances where price has been reversing, dropping, or it was in a huge drawdown and then it spiked in profit, then you might, okay, take like 10, 15 pips. The thing is, price will usually be close to these 15 pips of the predicted level. So if my, as I say, if my zone is 1.000, then, guys, 1.985 is your entry. If the price is 0.200, then start thinking about entries around 1.8 1185. You can divide your trade, you can enter with full position. That is what I leave to you, but we trade in the zone. I don't care about any stochastic moving average crosses. I don't trade with that. I trade only with within the zone. Okay, so we are trading here price action in the zone. Depending on time of volatility, okay, this is what I prefer, but only if the price is very, very volatile. If the price is not very volatile, okay, then you aim for, of course, more than 20 pips. Anand is saying he cannot hear me. I will say sound is okay. Okay, so sound is okay indeed. Okay, don't forget that Bob is confirming that sound is good. Okay, thanks, Bob. So session recap setups are valid, guys, for today, tomorrow, and sometimes day after tomorrow. So Wednesday, only morning, guys, only in the morning. Sometimes if you see that it's really going strong and that setup can be valid, then even on Wednesday afternoon, you can take the setup, but only sometimes. That is why I have chosen live trading to be on Wednesdays also, starting from mid-February, because we will have session recaps that are valid till Wednesday, and then on Wednesday, we do more trades, guys. Okay, it's good, right? So let's hope that that market will listen to us, but I really expect this 2017 to be very volatile. There are a lot of guys, a lot of things going on in the world. All those important things such as presidents, elections, Eurozone crisis, Trump as president, right wing in France. I mean, everything now is getting a bit hectic across the world, like oil situation. You know, I mean, everything is influencing the price. It's not like trading like 10 years ago. It was, I mean, I remember those times when I traded euro dollar during financial crisis. It was all about shorting on rallies. I mean, at that time, I'm not sure it will happen anytime soon. It was very easy to trade. I mean, only short on rallies, and so on and so on. Oh, well, guys, I mean, we don't have anything to trade like in 2007, 8, 9, like shorting euro dollar. I mean, everything is going up and then down. So generally speaking, we have trends, of course, but not as easy to spot as it was like 10 years ago. Yeah, Scott is saying that U.S. Navy ship fired warning shots at Iranian vessels. U.S. defense officials. Okay, you see, guys, a lot of tensions, and I think that this news actually spiked up oil today. Probably oil was spiked up because of, you see, I mean, everything is going like is following those intraday news, those intraday momentum. But for us traders, sometimes those news can be a second chance to enter the market, guys, okay? To enter the market when some things do happen. So 2017 will be volatile, but we are traders, so we want to trade whatever market is giving us, okay? We don't care whether the market is going up or down. We want to trade whatever we might, okay? So yeah, of course, Jack is asking, will you record Wednesday day trading sessions? Of course. I mean, everything is recorded, live, uploaded. Everything will be clear, transparent. So don't worry about it. Yes, everything will be exactly as always, okay? Recorded and uploaded. Yes, we will make a separate YouTube channel on Other Markets website. It will be called Live Trading with Nenad, and yeah. The time will be suitable for both US and European traders. So I will I think the time will be 2 GMT. I think that will be the time. because I want to have active session where I might do some live trades, okay? So yeah, let's see. If we don't get any setup well on live trade, then we will also have pending orders. So I mean, everything will be covered. Okay, add these levels to your system. Pay attention to trends. You might find also other trend-based entries. And pips pool is the maximum available number of pips you could have got on recap entries. Okay, guys, so that is the term what we use, pips pool. So let's start with this week setups. Guys, when you see red, it means bearish. When you see blue, it means bullish. Okay, so euro dollar main trend is bearish. Okay, main trend is bearish. I will try to sell at 1.0660. Okay, I don't care whether the price is going up. I want price to go up now, okay? Because if you remember my analysis where I was short, where I was actually shorting euro dollar, then you know that I actually waited for 1.0585 to short dollar, okay? You remember that. And now I still want some short trades, okay? I still want some short trades, but I want it a little bit higher, guys. I want it a little bit higher, okay? If you followed my analysis, I tweeted it today, euro dollar with Forex Empire. For all of you who don't know, I also do exclusive analysis for Forex Empire on Mondays, okay? And here this was an exclusive analysis, and of course the main analysis is always to be found on Admiral Markets website, the main website. You will always see my watermark here, guys. You will always see my watermark. So here the analysis said that we are actually in consolidation, okay? And the main thing is that you can go with scalps around 0.610, okay, to 20. That could be some scalping trades, okay? 1.0610 to 20, okay? I think that those short trades could be good for scalping because historically we saw rejections from that area. So I'm sure that from now moment perspective, it could give us some scalping pips, okay? Take 10, 15 pips maybe and it could be okay. So this is also what we should watch for. But the main thing is this 1.0650 to 70. This is the zone. I don't know. I always send full pictures, full resolution pictures here on Forex Empire, but I'm not sure why we cannot zoom in. I mean, let's see, open image in new tab. What will happen if I do that? Well, this is really bad resolution. Let me give you my full resolution here. I mean, this, I will show you guys now full resolution. Just give me a few seconds and you will see the logic why I want to short it there, okay? Here, guys, okay? You see consolidation. Yes, basically, you see, this is consolidation. Okay, it is highlighted. You can see a highlight Q here on the white background, and a lot of people ask me, what are these levels here, these colored lines? Guys, those are ATR stops, okay? ATR stops play important role in my analysis, indeed. So ATR stops, I prefer to trade with it, okay? And ATR stops are one of main thing in my confluence analysis. So here you can see that if the price gets to this POC zone, there is a complete retracement from this candle here. Okay, this is master candle, guys. I'm okay. Also live trading on Wednesdays, we will do master candle setups. Do you remember? Now I need to ask you. Do you remember master candle trading? We had I'm not sure, I had a webinar that still will be uploaded for price action trading school. I will make a separate webinar on master candles, but we also had a webinar just talking about master candles. And this was master candle. Okay, 1, 2, 3, 4, guys. 4 candles here, 4 candles here. And then the second candle broke this range, and this was short setup. It was on 4-hour time frame, but guys, this was master candle. And here Martin is saying master candle was fascinating. Indeed, we traded on 1-hour time frame, but we might also import the rule where we traded also on 4-hour time frame. But guys, this was very clear, okay? And here it took some time for euro dollar to drop after my previous analysis. It took some time for euro dollar to drop, but eventually it dropped. Okay, it dropped over 0.520, okay, giving us 60 pips of profit, because I clearly said that stop loss was 1.0620. Okay, so if you added 3-5 pips, your stop loss should never been hit, and you should have been in profit. So next sell is here. Watch this, guys. Historical selling here. Watch historical selling. This is failed head and shoulders. This is failed head and shoulders pattern. Okay, here. And here it's triple selling. Okay, 1, 2, 3 times selling, then 4 times selling. I really think that this level initially could give us some sell trades based on this historical selling. So this is the setup, okay, for euro dollar. And of course, guys, I mean 0.380 is also a strong level, and I think that we could see buy trade if we get any. I'm not sure that it will drop now, but here, guys, you see, this is what I've been waiting for also. This level is really supported here. So let's say it's 1.370, but 1.0380 is potentially good buy trade. You see, there was also a lot of historical buying here. Okay, a lot of historical buying. So I think that this level will be bought into should the price retrace to the downside. Okay, so euro dollar. Now pound dollar. Again, guys, pound dollar is in downtrend. I would be looking for sell around 22.17, 23.10 is stop, 21.20 is TP. Guys, we have 40-50 pip stops because ATR now is getting bigger because of this strong sell and strong, on some pairs it was sell trade, on some pairs it was buy trade, but ATR is getting higher. So our stop should also be slightly bigger, but it doesn't matter because it doesn't matter if you have 30, 50 or 100 pip stop loss, because your risk is fixed, okay? So your risk should be fixed. It doesn't matter, this is 40 pip stop loss, okay? But yet again, if you put 1% of risk in this 40 pips, it should be okay. This is what I see. I mean, I would prefer maybe a buy trade here around 21.20 because the range now is really big on GBP dollar. But 22.70 is indeed a strong level. We have also a confluence, point of confluence there. So this is 22.70. But now the price is getting close to our 21.20. Okay, guys, ATR has already overshot it. I will place this as 14. Okay, I don't use this. This is what I use, 14 here. Okay, you see ATR has been overshot, and on daily time frame, guys, you see daily time frame. Okay, here around 21.20 we saw a lot of buying. The low of this candle was 21.13. Here, guys, there was a lot of buying there. So I expect at least some counter trend trade to happen there. So around 21.20, 21.15. Well, let's see the price. If it gets there, we might see some initial buying from the level. But be careful because this is counter trend trade opportunity. For positional trade, it's 2270. A lot of confluence there. First, we have a broken trend line here that is making the next cross with EMA 89 and H3. Also, guys, here we can see that 2270 is also close. Okay, so this is resistance there. Okay, so that is resistance, and as the price is getting closer to this level, and as long as it's staying here, this EMA will go down. Here, this is huge order block from incomplete head and shoulders, inverted. This is inverted head and shoulders that was failed. Okay, failed head and shoulders. Okay, you see this head and shoulders was failed. Okay, this could have also been some mini rooftop, like roof bottom actually. So definitely a failed bullish pattern here, and a lot of you see resistance from there. So this was support, now this turned to resistance, 2270. So all of these now are order blocks, and I think if the price gets there, it should be sold. Okay, so 2270 for me is that's the zone where we could search for short entries. Also, guys, you see the thing is ATR has been overshot, so now this could be good for a counter trend trades. So if the price gets here, we will get even higher ATR there, and this is even another confluence for potential counter trend trade opportunity. So I think it could go to the upside. That is for pound dollar. Okay, now for Australian dollar. Okay, also be careful for any news. China, we have most important events here on website, but have in mind that today's biggest news will be about China, and here you can see that it's actually Chinese CPI and Australian dollar retail sales. So be careful if you do trade with this. Even if you want to have a trade with Australian dollar this night, I might tell you that you go really with low risk, 0.5%, because Chinese news coupled with Australian dollar news will move equities a lot. Nikkei will move, so you need to be careful. This is sell position, this is buy position. 74.20 is a sell on Australian dollar. Okay, so the price might get here again. Order blocks there, historical. This is order block, bearish order block. This is a historical selling. So it's also close to H4. And even if you place your Fibonacci from the highest point before this drop, you will see that it's also close to our 78.6. It's close to 78.6. So this could be a good compromise between waiting for huge retracement and waiting for slightly smaller retracement and potential trade. So 72.420 is a sell trade. Buy trade comes around 72.40. So 74.20 sell, 72.40 buy. 72.40 is here, guys, very close to L3. Also bullish order block here, retest point here. Okay, double bottom here. So I think that this could be a nice spot to enter a long opportunity here. Okay, so 72.40 around L3 here, potential counter trend trade opportunity. Trend trade comes here because, guys, this is retracement. You see, this is retracement in downtrend now. This is downtrend, this is retracement in downtrend. So for that purpose, we want to see price going to 74.20 zone, and then we might try to sell it. Next setup is Australian dollar New Zealand. I also have a pending order here, 1.0440, but I will monitor the price also on Australian dollar New Zealand, but my pending is set at 1.0440. Stop loss is 1.0390. Target price is 1.0520. Okay. Why 1.0440? Now you will see Australian dollar New Zealand. It's close to our entry point. Guys, this is, well, this is inverted head and shoulders. Inverted head and shoulders, okay, here this top has been broken, but now the price is retracing actually. The price is retracing here, and okay, so you see it's retracing. So I want to see slightly more of retracement, and here is a great confluence. We have a confluence of the bottom of right shoulder, L3, weekly pivot point. This is weekly, and ATR will be overshot. It's a small range currently on Australian dollar New Zealand, but if it gets there, I think it will be bought. Also pay attention to any bounces from this spot, okay, 1.0470, maybe for some scalp trades to the upside, but here lies our main trade setup, because guys, obviously this is head and shoulders, right? SHS, bullish pattern, shoulder, head, shoulder, right shoulder inverted, and it could go up. Also, don't forget that I have a bias for Australian dollar New Zealand, because Australian economy is stronger than New Zealand economy. Australian dollar is mainly service economy, also connected to gold and iron ore, so we call Australian dollar a hard commodity currency, while New Zealand dollar is soft commodity currency based on dairy and milk products. Australian dollar is harder, is a stronger economy, so any dips, big dips should be bought. From intra-week perspective, this could be good, okay? So I'm aiming, if I get this set up, I would be happy, because I have a pending order, okay, here. And I divided my 0.3 lots, okay, in 1.0440, 1.0430, and 1.0455. So let's see how it will happen. My stop loss is 1.0390. Well, if you use one lot, then you can divide one lot, okay? It depends only on your risk and the size of the account. Yes, Australian dollar, guys, is still good. I have 1.5% of risk with this trade. Particularly, I think that this could be some retracement here on Australian dollar, and I gave you the analysis today with Australian dollar CAD. We had a huge boost in CAD employment on Friday, but guys, dollar actually had good wages and low unemployment, and that means that their US economy is really strong and blooming. So with that, I think that dollar CAD might go up. Okay, this is still, if you watch this previous spike, okay, this is low, this is high, so this is still uptrend. You see, low, high, this is still uptrend, and here you see Fibonacci from this spot to this spot. Actually, it's 78.6, inverted head and shoulders. This is, for me, this looks bullish, but I also published the analysis on Admiral Markets today, and we actually had this clear setup, dollar CAD lean inverted head and shoulders for bullish continuation. Okay. Okay, here, guys, left head, right. This came exactly here. So it was like 32.10, 32.15. My entry was at 32.15. So as I say, I have 1.5% of risk. I have bullish signals here. But I don't like particularly NFP Mondays. NFP Mondays can be very nasty because price is retracing a lot, price is a bit awkward. We have bullish divergence. We have left head and right, inverted head and shoulder, complete shoulders. It's lean head and shoulders pattern, but it's still head and shoulders, okay? So what we actually are seeing here is that the price, it went up after my analysis. It was here, it went up, and then it started to retrace. So currently we see some dollar weakness. Also, don't forget, guys, that because of the news, I presume it was because of the news that the US Navy ship fired warning shots at Iranian vessels. Oil went up. So when oil is up, CAD is up. Dollar down, CAD up, oil up. So because of that, now we are seeing actually a drop. But here, clear trend line coupled with pivot point. So around 32.00, okay, it's now in the zone. Have in mind that this is stop loss, so well, guys, it looks like it might reject from there, but still, you see, it's a bit tricky because we have a lot of historical buyers, and that buyers are actually didn't have a strength here. So let's see what can happen. Eli is saying sorry for being late. He had server error on Admiral Markets. Yes, there was some server errors, but now it's okay. Here, this is the analysis, and I said it was a bit bullish here. Divergence straight at the bottom of right shoulder, trend line, L3 support. 1 hour is in retracement, okay, while 4 hour is bullish, okay, low, high, this is lower high here, and this is actually a higher low because you can place a trend line also here, double bottom. I mean, it looks bullish. My entry was 32.15, so let's see what will happen. I will roll the slides, guys, now, and you can ask me for anything else, okay? So this is euro dollar, okay? Then pound dollar. Then Australian dollar. Australian dollar New Zealand. And dollar CAD. Okay, one more thing, guys. Should dollar CAD drop to 30.80? I have a pending buy here. 30.80 is very, very strong. Okay, 30.80, let me just show you this. 30.80 daily time frame. Watch this, guys. It's L4 weekly breakout. Okay, here you have a trend line, and also this trend line will be moved like this if this pair goes down. We also have higher highs and higher lows. So if this retracement is deeper, look how strong buyers were there. So I have 30.80 also as on my watch list. So if this starts to drop, we might see another push around 30.80 to the upside. So I'm paying attention to 30.80, okay, also. Now Raymond is asking for New Zealand Swissy, then we will go with pound yen. Okay, I particularly didn't pay close attention to New Zealand Swissy. But from intraday perspective, it's a bit, you see, it's a bit whipsawing. This is a whipsaw, and it's going in the range. It's only, you see, the range is very small. It overshot the range, so I think we could see some rejections now, but if rejections don't happen now, they should happen here. Because you see ATR has been overshot, it's at resistance, so this is an opportunity for a counter trade. But still it's trapped. Definitely this is range. Okay, this is mini range, this is major range. So it should oscillate between the range. Then Shazad, Euro GBP and Dollar Yen Gerhard also. Okay, Gerard or Gerhard, I mean it's Gerard or I don't know how to pronounce your name. It's Gerhard, but also it can be Gerard. So it depends which country you live in. Yeah, Euro GBP and Dollar Yen. Euro GBP and Dollar Yen. This is Euro GBP. It's going up. Obviously, pay attention to this order block. Okay, so this is indeed strong order block. So this could be a retest and again up. But on, whoa, this is inverted head and shoulders, ascending scallop. Guys, this is really very bullish. So yeah, Euro GBP looks like buying on dips. Also, we have a mini trend line support here. Okay, so this could be a start of some channel here. Not a perfect one, but yes, still a channel. So yeah, this could be where the price might spike if it doesn't break this high here. So yeah, Euro GBP is looking bullish indeed. Pay attention to this order block here, at least for a scalp trade, and for some deeper retracement on 1 hour, this could be it. H4 retest. Yeah, and Euro GBP potential bearish head and shoulders on daily. Yes, yes, indeed. But look well where your, this is head and shoulders, but watch. If it breaks there, okay, it still has the room to go there. It's the height of this candle is 87.24. So it still has the room. It still has like 40 pips to the upside, right? So if it gets there, watch for possible rejections. But what I would like to see is on Euro GBP down, okay, so it's much better to buy it here. Then you will have almost 100 pips to the top of daily head and shoulders. But this could also break, so we need to be careful. So that is why I would wait for this or this and then probably go up. Okay, Dollar Yen. Dollar Yen is here. As I said, Dollar Yen after NFP went to target on good wages. But NFP was, I cannot say bad. It was not as predicted, but wages were much better, and unemployment was also great. And that is why dollar rallied across the board. So here you can see that the price is actually going down now, okay? So it looks like a sell on rallies because it hit our spot after NFP, but now it's dropping. So from trend perspective, this is where I would be paying attention to. This zone here. Straight from this, even lower. Okay, here it needs to retrace, enter there, then probably new drop. But you see, if it doesn't make a new low here, then we might see another push to the upside. It's tricky to trade dollar yen. It's very tricky to trade dollar yen. But I think this will be bought on dips. This will be bought on dips. Okay, guys, also pay attention to, I mean, this is, everything is close here. You see, it's a bit in range, some sort of range. But if it eventually drops, 115 is support. So I think 115 could be good to buy a dip on dollar yen. Okay? Correlation between euro dollar and euro GBP should be positive. Let's check it. Euro dollar and euro GBP. Euro dollar plus 61. Yes, plus 61. So Shazad, well, they move in same direction. Slightly lesser on last 500 bars, but last 200 hours, you see 61. Let's see daily. Yeah, it's on daily, on 200 days it's negative. But this is intraday, intra-week setup. So we use 1 hour, 200 bars. Okay, so this was it. Plus 61. So we might see some, yeah, movement in the same direction, indeed. Paul is saying, hi Nenad, can I put this pending as pending prices as pending orders? Paul, I advise you to watch the price, because these levels, as I said in the beginning, we enter within 50 pips. Okay, so here we might enter at 1.0645. So that is why I advise you to, if you put pending, then you need, once pending is hit, you need to watch the movement of the pair, because I mostly watch the price. I have an alarm. You have also alarms with Admiral Market Supreme Edition. Okay, so because of that, because of these alarms, okay, here you can actually okay, here you can execute Alarm Manager, and you actually will see a real time alert. Yeah, dollar yen screen is stuck. Okay, euro GBP, yes, I explained. Dollar yen here, I think it could be bought from from 115.00. I think that could be the price for buying the dip. Okay, for selling on rallies, this could be the zone. 116.85 to 117.03. Alarm Manager is here. Okay. Here. Okay. This is alarm. So you can actually place whatever alarm, price level, bar breakout, whatever. This is the part of, okay, price level here. You can use this. This is a part of MT4 Supreme. Okay, Marco is saying dollar CAD will be hit. I'm in dollar CAD, so my risk is 1.5%. Martin is saying, what is your best guess on February live trading? February 8 or I think February 15. And Martin, this will be on London US overlap, because I want also US traders to come to our session recap. And for US traders, trading London session only is different. So I want really everyone to be on live trading on Wednesdays. So yes, that will be overlap. Pound yen is here. It's dropping. You see, it's dropping like a stone, guys. Nikkei has been hammered heavily. Nikkei index. So pay attention to correlation between Nikkei and yen pairs. You see huge drop on Nikkei, 268 pips. Also on pound yen we see drop, also huge drop. So this could be a start of some bearish move, but yet again this is weekly support, 140.70. So pay attention to this level. That could be, there could be some spike, because historically there were spikes also here. Pay attention to this. This is sell on rallies now on pound yen. You could try to watch for this level to sell into, 142.47, but you see now it's in no man's land, it's going over, so you need to wait. Rally on Australian dollar, you need, please take a look at copper and iron ore prices. You see Australian gold went up heavily. Yes, that was, let's see gold. Okay, gold also. So gold and Australian dollar correlation. Ilya, it doesn't matter, daily is a short trend, but if you want to sell, you want to have the price in overbought territory. Guys, that is the main principle of trading. If you want to sell something, price needs to be overbought. If you want to buy something, price needs to be oversold. Daily is in downtrend, but you need retracement for another sell. You cannot take only one time frame into consideration. If you want to trade intraday or intra-week, then you take 4-hour and 1-hourly time frames. Daily is just for Q. So yes, this is short, but obviously this is retracing. And you can see that retrace on 4-hour and hourly. We will have strong news, guys, today for Australian dollar. So pay attention, okay? We already published fundamental analysis here, okay? Let's see, it should be, it's a bit slow now. Here, yes, weekly fundamental view. And this week's main focus is on Chinese trade balance and dollar retail sales of France. Chinese trade balance, guys, should move Australian dollar too, okay? Because it moves Nikkei index, and also we have Australian retail sales. It's very important news because it measures consumer spending that holds the majority of economic activity. So that will move Australian dollar. For that case, be careful, okay? And this is set up. Chinese yuan, okay, here. Correlation matrix. Australian dollar. We don't have it here. Okay, we have it. It's dollar Chinese, yeah, but I don't see it here. It's positive correlation. Whatever, it's a positive correlation. So let's say Australian dollar, let's see this. Let's see 300 bars. You see, it's a positive correlation with Nikkei index. And with, let's see, okay, I will try to find it here. No, we don't have Chinese index here on platform. Yeah, we only have dollar Chinese yuan. Let's see if it can load up some correlation here. Yeah, okay, so you see it's a positive correlation with yuan. So Australian dollar up, dollar Chinese yuan down. Okay, so it means if Australian dollar is going up, Australian dollar up, Chinese yuan up. So that is what I was saying, positive correlation with Australian dollar and Chinese yuan. So good news on Chinese data tonight could probably spike Australian dollar even more to the upside. So it's a positive correlation. Can I show slides again? Yes, guys. And that would be it. I hope that we will have some pips this week. Currently, I'm in dollar CAD trade, but as I said, I have 1.5% of risk. So I'm not risking much, especially because we traders call Monday after NFP Monday. So it's a bit tricky today. Most of pairs ATR was overshot. ATR was definitely overshot, so we might see some maybe buying from this zone if it gets there. So this is pound dollar. And pay attention to news. Be careful if you trade it. Be very careful, guys. This is Australian dollar, New Zealand, and finally dollar CAD. Okay? If I miss this trade, well, this is what I will be buying at. Around 30.80. Thank you guys for listening. I will come with new analysis. Tomorrow there will be some pair that we haven't covered. New webinars, and I wish you a great week. And as always, trade safe, guys, and don't forget to trade with normal risk. Don't go above 5% of risk. Never. You will be in safe zone. Cheers, everyone, and talk to you soon. Trade safe.